But let's start right now. It is tax deadline D-Day.
It's today.
It is today. Now you have reported and you found a few things that might be like, we're going, hello IRS, audit me, and what are those? Because we don't want to be doing them if we haven't already filed.
Correct. So I think the big thing there is when you're filing for a lot of deductions, you really need to be careful that you can justify every single one of those deductions. That doesn't mean that you shouldn't take them, but that's what kind of raises the red flag to the IRS, is if you're, paying almost no taxes because you're taking so many deductions.
And you don't have to be super rich to get audited. I mean, quite to the contrary. I mean, people who made, roughly $200,000, which isn't in the sort of millionaire bracket.
Exactly.
We're seeing a lot of audits go up there.
Yeah, that went up. I think it was 34% last year from the year before. And those are the scariest kinds of audits, the face-to-face audits. So, you really want to think about getting a tax attorney if it gets to that level. But not all audits are going to be that severe. A lot of them are just asking for more information, right? Like you say that you spend however much on this. We need to see the document, the receipts. So keep your receipts for up to 7 years.
So 7 years, that's the thing. You got to keep them in that garage, even if they're taking up space for things you would rather have them be. All right. So now, just because they bill you, it doesn't mean you necessarily owe the IRS money. How does that work?
Exactly. Yeah. So the number of correspondence audits, and that's what I was just referring to, where they're coming to you to get a little bit more clarification or a little bit more information. So those have more than doubled over the last 10 years. So the IRS is really kind of cracking down, wanting to see the proof, and that's where the receipts come in very, very handy.
Now, what is this about today may not actually be the hard deadline? I've been sitting here saying it's D-Day, it's D-Day. Are you telling me I'm wrong?
Yeah. So the key thing there is if you don't owe, if you're one of the people that are going to get a refund, you have a little bit more leeway, because a lot of the penalties are focused on how much you owe.
This is if you're getting a refund.
If you're getting a refund.
Well, sure, they don't care if you file, because they don't want to
they
take all the time you need, right?
Keep your money for a little bit longer. But if you owe, you do. You could find late filing penalties of 5% of what you will that builds up, and there are the late payment penalties. But you can always just ask for an extension.
So even if you file an extension, though, you have to pay your tax bill. That's the key thing there.
Yes, you can get more time to do the paperwork.
Okay. But
you owe, it's still due today.
Now, I think you've come up with a new game show title here. Let's make a deal with the IRS. How does this work?
So the IRS, so let's say you don't have the means, you don't have the money, you really can't pay. They do offer in compromise, which is where you settle that you don't have to pay the full amount. And surprisingly, those also increased 25% last year from the year before. That doesn't mean they're very easy, they're very difficult to get. You still need to provide a ton of personal financial information. You need to prove, that you can't make the money, that you don't have the assets to pay this. But 25% increase last year. It's pretty substantial.
Yeah, it is substantial. Now, as today, the 17th does matter for a lot of people.
Yes.
If you have waited till the last minute, it seems like a lot of people do.
Yeah.
There are some things you can do that can really get you in hot water. What are some of those?
It's so simple. For people who are rushing, imagine if you're still doing your taxes today. It's sad the mistakes that people make. You don't write your name the right way, or the key thing is that your name should be as it is spelled on your Social Security card.
People don't know that?
I don't know. Some people might not know that.
Wow.
It's common mistakes according to the IRS.
Wrong address too. You got to know where you live. These seem pretty simple to me. All right, but this bad math. I mean, the math is you got to double check this math if you're doing it yourself.
And that's where the online software comes in very, very handy.
Now,
I don't know. I don't trust myself to double check all of these.
Well, things. I don't blame you. I mean, the unsigned returns, though, this seems like another obvious one. But do people they're all in a hurry and they're rushing and they just forget that sign? So if you don't sign on the dotted line, what happens? They kick it back to you? It's not official?
It back to you. I mean, the key thing also is if you're married and you're filing jointly, both people need to sign and date that. Sometimes you might think, oh, just one person can do it and get away with it, but it's not enough.
And what about filing electronically? What do you need to know there?
You also need to sign electronically through a personal identification number, even if you're filing electronically. But you can do it for free if you make less than $57,000. The IRS provides several, software online partnerships. And even if you make more than that, you can still file online, but it'll cost you a little bit.
Now the IRS is going all Web 2.0 on us. They've actually made a little helpful video about things that you can do. I think we're looking at it right now, and people can go online. I don't think we're going to actually hear from her, but she looks like she knows what she's talking about. She's very official. So where do you go to hear? Just irs.gov?
Yeah, irs.gov. And on our store, we provide some of the links to those videos as well.
And so they basically walk you through all these last-minute filing errors and things. I see so many empty desks around here. What do you think that means? Are these people at home doing their taxes? All right, well, everybody should be reading. Everybody should be reading. Jonnelle Marte, she writes for SmartMoney.com.